became like my phone script. So I could quote it for you right now if you guys want, but I don't have like an actual written down script. Like sometimes I got people on live dials that they'll ask me, hey, do you have a script? I'm like, no, but if you want to just record me, that's fine. Because I'm on live dials, I'm just doing it anyway. So.
Do you do one call closes, or do you show up to book appointments? Or?
So I booked the appointments. Yeah. What I've learned with telesales is the no-show ratio is like really high. So like it's like the best I can ever get is like 50%, and I'm usually like, oh, I'm having a good week if it's there. But what I do to try to eliminate the no-shows is if I'm booking in the morning, I'll try to book for later that evening or the next day. Like no further than that. So like if somebody tells me like, hey, I'm not available tonight or tomorrow, I'll just tell them like, hey, no problem, I'll just call you back another time. I don't specify when, I'll just mark it as like, hey, they were busy, and then I just call them back like whenever. You know, because that happened to me a lot today too with the weekend coming up. It's kind of one of those weird weekends. So if they couldn't meet, like, you know, tonight I was here, but if they couldn't meet tomorrow, I'm like, hey, I'll just try you back some other time. Just because anything more than like 48 hours out is like, it's a no-show.
Yeah,
They'll forget. Yeah. Yeah.
How much do you write on the phone a month, do you think?
I would say like about 30. Yeah, because like last month was lower for me. I think I did like 23, but the month before I did 37. So I'm good for about 30 a month.
Do you think you spend more in leads trying to do it on the phone or less?
I think I spend a little bit more, I'd say, because when I was in home, believe it or not, I was spending maybe about like $1,500 a week on leads. And as a telesales agent, I'm at like 25 now. So I've definitely increased. Now I'm working on my book of business as well, which is helping. Like if you've been here more than a year and you have a book of business, that's like gold.
Yeah.
You know, so I'll implement that as well. But I'm still like about like 2,500 a week in purchases. Yeah.
And when you know, I'm thinking from terms of like, maybe that's a different question. So you're showing up to book appointments. I don't know, somebody else asked a question.
I have a question.
Yeah,
how do you show credibility?
Yeah, so what I do is not when I'm booking the appointment, I'm just booking an appointment, but like right before the appointment, I'll actually send them a picture of my driver's license and my insurance license. Like I'm just unafraid to show them who I am.
Right.
And I'll do it like maybe like a minute before I call them. So then that way, like my opening line is like they pick up the phone, I'm like, hey, Marissa, it's Travis, I'm ready for our mortgage protection appointment. Now a moment ago, I just sent over my credentials to you in a text message. It's a picture of my driver's license and my insurance license. Did you receive that?
Oh yeah, I did.
Okay, perfect. And then I'll just kind of move on from there. Every now and then you get someone like, no, I haven't seen that. And I'm like, hey, would you do me a favor? I'm required to show it to you. Can you check your text messages? I'm only doing that because I want to make sure that once I start getting into everything, I don't want like the pushback, like I don't know who you are, or you know, you could be a scam or just whatever. So that right there kind of like, you know, tells them who I am. It kind of gets the credibility going.
It's a nice opening to bring the guard down.
Yeah,
sure.
100%. Yeah.
And then in terms of like collecting sensitive information over the phone, if you will, is there a way you're proactive on that versus reactive? And
yeah, sure. So the two things that most people, especially when I was new on the telesales, I would like always get stuck. Social and then banking. Banking was a big one.
Right.
And I think the reason why is like, because I would be like, hey, what's your social? And they're like, whoa, what? You know, or I'd say, hey, what's your banking info? They're like, I'm not giving you that. And I was like, oh, we're stuck. So now I just learned to explain it. So like before I ask for the social, I'm like, hey, as a reminder, Marissa, they're not going to be sending out like a doctor or a nurse to do a full physical. But what they will do is they're going to pull all your medical records. That's how they'll determine whether or not they're going to grant you the coverage. Now, how they're going to do that is by using your social. So go ahead with your social, and then right there, they're just kind of ripping it off there. And then banking is kind of similar. I'll say, hey, and lastly, you know, the insurance carriers, they will be asking for some banking information as well, and that's for two reasons. First reason, it's illegal to pay for life insurance or mortgage protection using someone else's account. So they are going to verify to make sure that this is your account and it's active. And then the second reason for that is because this is how you pay for the policy. If you do get approved, Marissa, they're going to pull the premium within 48 hours of the approval, and then every month on the same day they'll draft it. And that's just to make sure that it doesn't lapse and you're always covered. So who do you bank with? And then usually they'll tell me from there, okay, perfect. Then I'm just Googling like the routing number. So they say, hey, I bank with DCU. Okay, that was open in Massachusetts. Yes, okay, I'm showing that the routing number is 211 blah, blah, blah. Is that correct? Yes, it is. Okay, and then what's the account number? And then just kind of nice and smooth right in there.
That's nice.
Yeah.
Are you asking for this information like prior to giving quotes? Are you setting the table with everything with the meeting prior, or are you kind of just going along with it?
Me personally, I don't. Some of our agents do.
Okay.
I don't. I'm just kind of like, as I'm in the e-app, that's how I'm explaining it.
So you're going with it?
Yeah, I'm just kind of going with the flow. Yeah.
Okay, got it.
I mean, I used to, like when I was in home too, I used to always, I learned it from Grady Polson. I would be like, hey, I'm gonna need like a driver's license voided check and a bottle of water. And then the first couple times I tried that on the phone, that was okay. Asked for a bottle of water a couple times, and walked around, bought out the phone. Yeah, but then I stopped doing that, and I just kind of learned to explain it better while I'm on that page in the e-app.
Okay.
Yeah. And every now and then I'll still get stuck to, like, I'll still get someone, like, last week I had a young lady that I get all the way through the e-app, and then she just wouldn't give me the banking info, so it'll happen, but it's rare, and I always chalk it up to like, hey, they probably would have been a chargeback anyway. You know, if they're not gonna, I'll help me get the info.
So you
Right, they're not
have,
that serious.
Yeah.
so you have them pick an option, you've explained everything, then you ask for banking.
Correct, yeah, so, because I'll only ask for the banking when I'm in the e-app, so basically, I've given them 3 options. Hey, if you were to get approved, which one would make the most sense for you? Hey, I picked the middle one, okay, perfect, then I'm just kind of right in. And then by the time I get to the last page, which is on Americo, move, same thing, I'm asking for it there. Yeah.
Thank you.
I like that you're explaining the process through it so that
Yeah.
you're not just like boom, 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 because
Yeah.
sometimes that works, other times it's whoa,
Right, yeah.
right? Whoa, it's
Yeah.
fast, right? We only went
Yeah.
boom for 10 minutes, right?
Yeah. Yeah, I think too, like you gotta find your groove, because like this is like something I failed at. Like my first couple weeks in telesales, it was like panic mode. I remember like I went a week without a sale, and I was like, oh my god, I gotta get back out in the field, because I just went cold turkey like telesales, and then I started doing a hybrid, and then little by little I started to gain confidence, and I completely went over the phone. But I think the phones is like all about, you gotta find a groove. Activity's big though, because like you can't find a groove. You know, imagine me trying to play basketball and never shooting, right? It's like you've got to find your groove, but once you do, then you can kind of roll with it.
What does your schedule look like, Travis?
Yeah, so typically I'll start dialing at 8 a.m. in the morning, Monday. So I'm still working the traditional Monday through Saturday. But what I find is, again, I'm trying to book appointments for later that evening or the next day. So usually Mondays I'll come in and I'm dialing in the morning for Monday night and then Tuesday. And then Tuesdays, what I try not to do is I try not to book any appointments in the mornings on Tuesday through Friday. Reason being is I know I'm going to need that to dial to book for the later that same day evening. Does that make sense?
Yeah.
Or the next day. Saturday's the one that's a little bit weird because the next day is Sunday, which I don't work Sunday, and I don't want to book on Monday because the no-show ratio is insane. So Saturday mornings are usually heavy with appointments. I'm usually not like dialing on Saturday. It's usually all the appointments I booked from Friday. And then Saturday afternoons is usually pretty light. Usually like my appointments are running out and then the answer rates are getting a lot lower, which is weird because when I was in home, Saturday nights were great, but on the phones it's like flipped. It's weird. But I just use it as an excuse like, hey, great, I get to go home and spend time with the wife and kids now. So, but to answer your question, I'd say regular schedule, start at 8, Monday through Friday. I'm usually taking like maybe a couple hour lunch break in the middle of the day. I'm definitely dialing for the evenings because like Trey said, evening times is like money. I most of the time work mortgage leads. So what you want to understand about that type of lead is like they're homeowners, right? They're probably working. So like a ton of your appointments and answers are coming in the evening, like after 5. And then Saturday mornings and then early afternoons are typically good as well, for appointments.
Right.
Yeah. So yeah, usually I'm out of the office like sometime like early to late afternoon Saturday, and then I'm taking every Sunday off. Mm-hmm.
That's good. Okay, so you're booking appointments to do telesales? It's not like one code close? Is that kind of how you do it?
I'm usually booking them. I also tried some social media Facebook leads, like Happy Agent is doing those.
Okay.
What I found with Facebook leads or social media leads, like one call close is the way to go. I don't know what it is, but it's like really hard to book an appointment and get them to show. But if you have the mortgage mailers or like second chance leads at an ILC, all that stuff, perfect to book an appointment.
Okay.
Yeah.
Perfect. Thank you.
Yeah.
Appreciate it. Any live transfers or no?
I did live transfers for a little bit because it helped me hit Hall of Fame. I was pretty close. I think I did like 411 last year, so I was like skinning my teeth.
Okay.
So live transfers helped me do that. But right now I'm like 100% mortgage.
Okay.
Yeah,
Thank you.
yeah.
And Brad, what's your opening phone screen? I don't know how one exactly, but just go off the top real quick. What would you do, like just for any basic client?
Yeah, sure. Are you talking about to book the appointment or to run the appointment?
Run the appointment.
To run the appointment, okay. So I'll kind of go back. So, hey, Rami.
Yeah.
Hey, Rami, it's Travis. I'm ready for a mortgage protection appointment. Now, a moment ago, I just sent over my driver's license and my insurance license. You got it in a text message. Did you receive that?
Yes, I did.
Okay, perfect. Okay. Now, are you a first-time home buyer?
Yes.
Hey, congratulations. Anytime you buy a home, Rami, there's always 3 different types of insurances that you need. The first 2, they typically make you purchase before you even close on the home. And then the third one is normally put in place like right after closing. So Rami, I'll just cover all 3 really quickly. That way there's no confusion. First one will be PMI, or private mortgage insurance. Now this is the one that most new homeowners get confused with, but this one actually protects the lender, not you. And again, DCU is going to make you pay for the PMI if when you bought the home you were unable to put 20% down. Now when you bought the home over on Main Street, were you able to put a 20% down payment on there?
No, it's not.
Okay, and that's pretty normal. So what you'll notice is in your mortgage statement, you already have the PMI. That's what you're paying for. Again, that protects the lender. The second form of insurance is pretty easy to understand. That's the homeowner's insurance. That protects the physical property, storm damage, fire damage, something like that. But then the third form of insurance is the one that we're going to talk about today real briefly. That's what you filled out the form for. That's mortgage protection. And that one protects you. So PMI protects the lender, homeowner's insurance protects the property, mortgage protection will protect you. And it's there in case of like a death, disability, or a critical illness like heart attack, cancer, stroke. If that were to happen to you yesterday, right, because we don't want to speak things into existence, then money would come into the family today to either help pay off the home, pay down the mortgage, or in some cases it'll just make monthly payments for a period of time to help aid in transition. So Rami, my job's pretty simple. I'm just a medical underwriter that got assigned to the case. I'm just going to ask you about 2 minutes of health questions just to kind of see what you'll be eligible and what you'll qualify for. I'll ask you 2 minutes of financial questions because Rami, this is a super important insurance to have. However, it doesn't make any sense to be insurance rich and cash poor. So we do need to work to find something that makes financial sense and fits easily into the budget. But Rami, if I can find something that you're healthy enough to qualify for, and then B, it's one that makes financial sense and doesn't take food off the table, I'll help you submit a request for coverage to see if we can get you approved. Does that sound fair?
Yes, it does.
And then from right there, I'm into the financial inventory. So that's kind of like my opening.
Nice. I like it.
Awesome.
Anybody have questions for Travis?
Yeah, real quick, were you always doing mortgage, or did you start with final expense and switch?
I started with final expense, and then I slowly transitioned to mortgage. I was like,
What made you do that?
So my somebody in my upline, Caleb Amoros, like 2 levels above me, he was like, hey Travis, now that you're doing this full time, he's like, I'd recommend getting into mortgage if it's available. And I asked him why. He just basically said higher premiums and the persistency is really good. You know, because you're dealing with people that, you know, they wouldn't get approved for a mortgage if they didn't have like disposable income, I should say, or they have income. So I kind of listened to his advice, and then I kind of fell in love with it. Got pretty good with it. Yeah.
Sounds like it.
Yeah.
You were running mortgage in home though. You didn't start doing mortgage on telesales.
Correct.
Okay.
Yeah. And to me, like I said, that was, again, I'm not sure if I could have started telesales, just to be honest, but it's the in-home process, meeting people in person, that really helped me kind of figure that out. Because I was early on, I still remember, I was like, I was telling Caleb Bomber, I was like, I'm the worst sales agent ever. I couldn't figure out how to present it, because final expense is like an easy sit and it's an easy sell, because like, I mean, they understand like, hey, I just need something to cover me for burial, right? Whereas with mortgage protection, you're trying to explain to them, sometimes you got to explain to them like what it is when they fill out the form, but then also too, you have to, show them like what it would look like without it. And as a new agent, I was like not good with that. So I had to really, really learn, dig in, kind of figure out how to do that,
And
so.
how long do you, sorry I'm asking so many questions.
No, it's okay.
But how long do you think you take on the phone, now that you're an expert at it, with the appointment for the mortgage protection?
And I would say, and by the way, I'm definitely not an expert. I just like have the numbers in my favor, yeah. So because like I failed like thousands of times, but I'd say like you talk about the length of time.
Yeah, like how
on a
long is
pitch.
the call? Yeah.
I would say like 30 minutes if they're gonna tell me no. and then maybe 45 if we're going through an e-app. So that's usually is what I'll do. And I'll still book my appointment sometimes if I can, like 30 minutes out. Like yesterday was one of those days where it's just like I got way behind. I just like, whoops, but it's a good problem to have if everyone's answering the phone. And I'm only doing that because the no-show ratio over the phone is so high that it's pretty common that I'll, you know, like a couple days ago, my first 3 appointments, no-show, no-show, no-show. So I'm like, good thing I had 30 minutes, otherwise I'm like, what am I doing? You know,
So how do you present senior mortgage on the phone?
Kind of the same way, but the way I'm explaining it, because, you know, if I'm talking to someone who's like, you know, 63 and they had like 3 stints put in like 8 years ago, it's like, well, term is off the table. So I'm pitching whole life, but I'm explaining how they're going to protect the equity. You know, so usually what I'll do is like, so, because on the financial inventory, you're going to ask them how much their monthly mortgage is. So let's just say for math, it's $1,000, right? So if their monthly mortgage is $1,000, I'm going to give them 3 options, and it's 6 months, a year, and a year and a half of mortgage payments. So basically, if you're doing that math, it's like $6,000, $12,000, and $18,000 in whole life. And so how I'm explaining it is like, hey, look, like when, you know, Mary, when you pass away, let's say she's leaving the house to the son or her husband or whatever, when you pass away, like, you know, there's a loss of income. If you're leaving the house to your son's going to need at least 6 months, a year, year and a half to kind of make decisions. A, whether they're taking over the house, you know, the mortgage still needs to be paid. B, maybe they're going to sell it, right, but they need time to put it on the market. And I like to explain to them that, hey, look, the bank, as cold as it sounds, but Mary, when you pass away, the bank isn't going to like give your son grace and say, hey, don't worry, let us know when everything's all settled. They'll look to foreclose on the home if someone's not paying the mortgage. And I like to ask them, like, hey, do you think your son has enough money to pay his mortgage and yours after you're gone? And obviously, in today's economy, the answer is like always no. So I just explain that, hey, look, here's how this is going to work. If you get approved for it, when you pass away, you know, your son, John, is going to receive 6 months, a year, or a year and a half of mortgage payments. So that way he doesn't have to worry about footing that bill. You know, that gives him time to kind of figure out, hey, if he's going to take over the house himself or just sell it, get the equity, walk away. So it's just positioning it so that they understand that, hey, we need to protect the equity that you've built up over time and make sure that the bank is not just going to foreclose and take all that.
Yeah. That's good.
All right. Well, good.